Right, hello everybody, welcome to this next video. My name's Adrian Boothie and we're going to take a look at limit orders. Limit orders are a great way of trying to identify or trying to place a trade at a price that is lower than the current market prices. So in other words, what we're saying here is, right, I want to buy this market, but I don't want to pay up here for it. You know, here's a little bit too expensive. I think that the market's going to come down a bit first, then I want to buy it, because I think it's then going to go up from there. So I think we're going to have a little pullback, and then I want to get on that next move. So let's have a look at a particular chart that I've just mocked up, and let's have a look at a bit more detail. So a limit order is basically where you want to place an order to buy below the current market price. And this is equally where you want to place an order to sell above the current market price as well. So let's get a rough idea from it. Let's say the market's moving, we're here, we're up here. What we want to do is think, right, price X is where I want to buy it. I'm expecting the market to pull back, move down to price X. That's where my order is. As the market gets to that level, my order will automatically buy, and in I'll go on my trade, and hopefully the market will then go on and rally from there. So effectively, price X is the most that I'm prepared to pay for that particular market. Looking at a trading platform here, we can simply click on the entry button on the FXCM platform. So we've got euro dollar, we want to buy 100,000, and this is the price at which you want to do it. So here I might want to do it at, I don't know, 112.00, something like that. So I can put that into my platform, click OK, and then I have a resting order in there. Now the time in force, this means good for the day, so it's only going to run for the end of the day, at which point that order will cancel. I can select, however, GTC if I want to. GTC means good till cancelled, so that market order will run and run and run and run until either the market price gets down to 112 or I cancel that order to buy. So it's up to you how you want to do that. Is this going to be an order that you want to run just for the day? In which case, select time in force a day, or good for the day, or GFD, sometimes you might get on a platform, or GTC, good till cancelled. So as soon as we don't want that order anymore, or that trade is filled, then that's it. That's the end of it. So in order to transmit, just click OK, and then what you'll see on your orders button is the order in question here. So it says we're waiting to buy 100,000 at the price that we want. And of course, right click on it and we can very simply remove our order here to cancel the order off from working. So good till cancelled, I would have removed that order there and then. So it's a very useful type of order, and it's really, as I say, just to make sure that we can, I guess, have a bit control over what we're doing. Sometimes we want to buy a market, but we don't want to buy it at the price that it's currently at. So if you're looking for prices to fall a little bit down first, or rise a little bit first, then it just helps us get in the market at a price that we might want to at some point in the future.